This is African American History is American History. Welcome. I'm your host, Harlan Kearsley. This program's goal is to foster understanding, promote discussion, and expand knowledge through stories of historical events, bios of unsung heroes, as well as timely and relevant news stories which hopefully will paint a vivid picture of the effects of segregation, discrimination, and bigotry on the lives of both blacks and whites.
We're here today to announce a major development in the Justice Department's anti-redlining initiative, which was made possible by the hard work of the staffs of both of their offices.
The term redlining comes from government ownership programs that were created as part of the 1930s era New Deal. To help keep people in their homes, the federal government established the Home Owners Loan Corporation, or HOLC. Now, its goal was to finance mortgages with better terms, like lower interest rates and longer repayment periods, to help people make payments and avoid foreclosure in the wake of the Depression. However, President Roosevelt's New Deal did little to advance the cause of racial equality in America with regard to housing. To determine what loans they would guarantee, HOLC sent people to appraise neighborhoods and vet homeowners. They documented the types of housing in neighborhoods along with information about the people who lived there, using color-coded maps, ranking the loan worthiness of neighborhoods in more than 200 cities and towns across the United States. They also cataloged, quote, detrimental influences, end quote, with racist descriptions like, quote, infiltration of Negroes, end quote, and, quote, mixed races, end quote, characteristics that lowered a neighborhood's value. Neighborhoods were ranked from least risky to most risky, or from A through D. The federal government deemed D areas as places where property values were most likely to go down, and those areas were marked in red, a sign that these neighborhoods were not worthy of inclusion in home ownership and lending programs. Now, I'm sure it won't surprise you that most of the D areas were neighborhoods where black residents lived. And so, black homeowners were unable to get home loans that were backed by government insurance programs. That's redlining, drawing boundaries around neighborhoods based on residents' race and depriving them of resources and opportunities, effectively racializing poverty in cities across the U.S. The very definition of structural racism, where racism is built into the rules of society. Redlining worsened poverty and segregation in cities all across the United States and left a devastating legacy of income, health, and racial disparities. This is African American History is American History.
We are here today to announce Ameris Bank's agreement to enter into a consent decree regarding our allegations that the bank engaged in redlining in violation of the Fair Housing Act and the Equal Credit Opportunity Act. Redlining occurs when lenders deny or discourage applications or avoid providing loans in neighborhoods because of the race, color, or national origin of the people who live in those neighborhoods. Our complaint alleges that the bank denied or discouraged home loan applications and other credit opportunities and services in major black and Hispanic neighborhoods here in Jacksonville. As a result of our investigation, we have reached a settlement agreement with Ameris. If approved by the court, the bank would pay $9 million to expand access to credit opportunities for residents of black and Hispanic neighborhoods in Jacksonville. This investigation is part of the Justice Department's Combating Redlining initiative, which I launched 2 years ago this month. Once this agreement is approved, the initiative will have secured in total more than $100 million for communities across the country that have been harmed by discriminatory lending practices.
Using the term redlining became more common during the civil rights movement, especially in the era leading up to the passage of the Fair Housing Act of 1968, which prohibited housing discrimination, and the Home Mortgage Disclosure Act of 1975, which required the release of lending data. Today, the term redlining has come to mean racial discrimination of any kind in housing. Although the actual practice of redlining was banned in 1968, other forms of housing discrimination still persist. According to a February 6, 2023 article from the Journal of General Internal Medicine, quote, historical redlining is linked to increased risk of diabetes, hypertension, and early mortality due to heart disease, with evidence suggesting it impacts health through suppressing economic opportunity and human capital, or the knowledge, skills, and value one contributes to society. End quote. This has been African American History is American History, the episode you've been listening to, The History of Redlining, was written and directed by Harlan Kearsley. I'm Harlan Kearsley. Thank you for listening. And if you haven't done so, please subscribe to the channel. Now remember, it's free, and once you hit the subscribe button and the little bell icon, you'll be notified as soon as new episodes are posted. Thanks again, and please, stay safe. African American History is American History. Copyright H.C. Kearsley, 2023.